Happy Sunday, YouTube. Welcome to the great state of Tennessee, the patron state of shoot stuff. According to that famous Mark Wahlberg quote from his movie Shooter from 2007. Best line in that whole movie as far as I'm concerned. Anyway, it's a fine sunny morning. Palm Sunday for the Christians among us. 1 week to Easter. Planning to be home for that Easter weekend. That'll be fun, I hope. We'll find out when it gets here, of course. But for the moment, I wanted to share this lovely vista with all of you. Whatever of it you can see, thanks to the camera angle of my phone here. To build a little bit, so you can see some mountain caps there. I haven't come to this region of Tennessee in a while, so I always forget how beautiful it is, even though spring hasn't really sprung here yet. It's on the way, but it hasn't really sprung. The last time I was through this corridor, it was last fall? Late last summer? Anyway, pretty sure the last time I came through this stretch of road, it was all the way green. At least if I remember correctly, but I may have come through here at some point after the end of last summer, but I really do forget when that might have been. I know I've been on portions of this road, but I think I was further south, closer to Knoxville. Anyway, despite the fact that it is sunny, despite the fact that spring is springing, there's still a bit of a touch of gloom to the air, at least for those of us out here, us highway cowboys on the interstates, because there's still a great deal of uncertainty in the logistics market. I saw a news blast from OIDA a few weeks ago, and I'm only just now trying to talk about it, but according to the information that they were able to tabulate, in November of 2023, there was a net loss of 2,087 active operating authorities, according to their information. So 2,087 more operating authorities either were suspended or all the way deactivated. Meaning suspended in terms of temporary suspension that could be reactivated later on, or fully deactivated as in, all the way out of business, shut down, we're going to put the kibosh in the whole kit and caboodle here. Which is unfortunate for those folks who went out of business. I'm sure a lot of them also were folks who decided to retire. You know, they were older drivers who've been doing it for 25, 30 years, decided it was time to get out of the game, and hung it up. And honestly, you know, you can't say boo about that. If you've put your time in on the road, put your miles in on the road, you've earned your retirement, and I salute you. But I think the vast majority of the lost authorities have been folks who just, they couldn't make it work. They got in during the pandemic, got behind, and couldn't dig out of the hole. And, you know, there they were. So there's also the reality that I think fewer folks are trying to become motor carriers, their own individual operating authorities, just because of the significant headwinds that the industry is experiencing right now. And to be fair, that is a very smart move. If you don't already have sufficient skin in the game, now is not the time to become an owner-operator. Not until things stabilize. But then again, that's my assessment, and I am not fully educated in this. You might be seeing different information, you might be seeing different opportunities, and so you might believe you have a good opportunity or a good chance to make your own operating authority work. So far, I've been doing okay. I've not been doing well as an individual operating authority, but I've been doing okay. I'm surviving. You know, I'm not getting buried by bills that I cannot pay. I can meet my expenses on a routine margin that I do have doesn't evaporate, because I need to, in addition to meeting my expenses, I also need to make sure that I'm rebuilding my cash reserves, because those got badly depleted in 2023. So that's a main focus for this year, is just rebuilding to a place of security so that I can weather the storm as we go further and further into 2024. And of course also already planning ahead sort of for 2025. Woo, that curve was a bit surprising. But there is some glimmers of hope at the end of the tunnel, as it were, as it just came out of a tunnel. So there's a bit of hope for us, as it were. Their OOIDA is seeing some data that does indicate that potentially, and I stress the term potentially, could indicate that the freight market either is reaching or has reached bottom. Now, I think it's a bit too soon to tell if we're really at the bottom of the freight market yet, and we're going to start seeing the uptick in rates. But OOIDA seemed to sound a note of encouragement in one of their more recent email blasts. Now, whether or not that note of encouragement remains through this month and into April, I don't know. That time will tell. But they are seeing a couple of positive trends in some freight rates that would seem to indicate that maybe we're through the worst of it. I'm not sure I believe it, but at the same time, I have to remain hopeful, because not only does my business rely on that hope, but thousands of other businesses, carriers from individual to mid-sized fleets, they're relying on that same hope as well. But a lot of that, is potentially being driven by two factors. Number one, that the material reserves for retailers as well as producers of finished goods have been drawn down, so they have to order more material, which is in turn will translate into more freight opportunities in the load markets across the board, from dry van, reefer, flatbed, step deck, all of that. That's one factor. People still want to remain in business and either retail finished goods somehow, some way, or produce goods to then feed market demand. So, that of course is one thing will follow the other. The second factor is that the capacity market itself is continuing to right size. And that is best exemplified by what I started this video with, talking about those net loss of 2,087 authorities this past November. The market is continuing to right size, and the folks who just cannot make a go of it are getting out of the market, which in turn is reducing the number of competitors that the rest of us have, at least in terms of individual businesses, in terms of individual motor carriers, which is, I hate to say it, it's good for those of us who can survive. It's not great for those who could not, and I feel bad for them. I was almost one of those carriers at the end of 2023. I almost went out of business. But I made some hard decisions, and here we are. So, it's unfortunate that those folks whose dream of a successful business evaporated, at least in the short term, but there's always opportunities elsewhere, not only in the trucking industry, perhaps a different flavor of it, or perhaps some kind of other business opportunity in general. The U.S. economy is still in a massive state of flux. It's not really being spoken about in the news, because everyone's really worried more about the upcoming election instead of the real state of the economy, because I don't really think anyone has a true sense of where the U.S. economy actually is. And now I'm saying that and I must stress this, I am saying that from a place largely uneducated in economics. I have to admit that. I am not an economist. I am not someone who understands economic trends. Some of the numbers don't make sense to me. These are things I have to be honest about. But from the information I am seeing, it doesn't seem like anyone really has a true grasp of where the economy is going or where it's going to go, because we're still in a post-pandemic state of flux. And, a whole host of factors are driving that consistent flux. The work from home fallout from the pandemic is still rippling through the industry. That's affecting certain opportunities for freight or for shipments, because now companies are not supporting the office complexes they used to support pre-pandemic, because a lot of their employees have transitioned to a work from home situation. A lot of those folks are now getting their supplies, essentially, if they're not going to Best Buy or Staples or Office Depot or wherever, they're getting their supplies to their doorstep by Amazon. So, but then again, even Amazon has seen some significant fluctuations in its business in terms of, freight volumes, order volumes, product volumes, you name it. I mean, you would think Amazon would still be going gangbusters, and while they certainly are, I don't believe they're going quite as gangbusters as they were, at least based on the fact that they had to do a lot of layoffs, and also that their massive distribution center that they built by Elkhart, Indiana, even though it's a finished facility and it's ready to be activated, it remains inert, in standby. It's not staffed that I know of beyond security. There are no trailers there. There's no goods going in and out of there. It's not a facility that is active, which is by itself an indicator that the expansion that Amazon expected to continue in the e-commerce market, that has stagnated to the point where their planned expansions of their distribution centers and other things of that nature in certain markets, in certain areas, just the justification for it ended up not being there. So Amazon built facilities, at least one, that they currently do not have the economic justification to operate. So it's a dead unit that they are waiting and hoping they can actually activate at some point down the road. That's because, with inflation and with a lot of folks now not having the liquid capital they had even during the pandemic, that has caused a lot of tightening in discretionary spending, at least based on what I've been able to glean. Like, yeah, I'm tightening up my discretionary spending to a significant degree. Like, I would like to go out and spend money on frivolous things, or go buy a bunch of ammo and go to the shooting range and just blast holes in paper for hours on end. I would like to order XYZ PDQ whatever. I'd like to buy more things that are to do with my various hobbies, but none of those things really are in the budget, except maybe a little bit of a treat here and there, because I've got to be very careful with my spending and make sure that I'm spending wisely as the first calendar quarter of the year winds down, because there's no guarantee that second and third quarter of 2024 are going to see any sort of real improvement in how things are shaking out. I hope they will lead to some signs of improvement, but at the same time, there's really no guarantee. So, and even though diesel is still hovering much higher than it should be, blessedly it has not gone back to the initial pandemic exit rates of $5 plus on average a gallon nationwide, $6 plus on the coasts. because that was brutal. That was absolutely brutal. So I'm glad that hasn't happened, but at the same time, there's still no guarantee that it won't happen, because there's still a lot of uncertainty in Eastern Europe between Russia and Ukraine, and that in turn is still badly affecting Europe's energy markets, which in turn is, creating unrest in the U.S. energy markets, because whenever someone sneezes in Eastern Europe now, or especially in the Middle East, all forecasts become immediately invalid, because no one knows that sneeze was just going to be a moment to say, bless you, here's a tissue, or World War III. So, it is what it is. But yeah, I think we're coming out of the fun, as it were, here, those mountain trails, as it were. I think we're about to get out of the mountains in general and head into the flat of Tennessee.